Hey everyone, welcome back to Corporate Decoder. Today HUB just filed an 8KA and it looks like they are amending a previous report about an officer, and the details of their departure are becoming clearer. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is an amendment, which means they are adding information to a previous report. And the key takeaway here is we are getting more details about the separation agreement for their former chief financial officer. So this 8KA, which is an amended report, is basically adding more color to a story that started a little while ago. Remember, on the 2nd of June of 2026, HUB Group Incorporated filed a report saying that Todd Heater was stepping in as interim chief financial officer. This was because Kevin Beth, the previous CFO, was leaving the company. Well, this new filing gives us the specifics of Mr. Beth's exit. The main reason for this amended filing is to provide more details about the separation agreement with Kevin Beth. Back on the 24th of June, the company and Mr. Beth signed this separation agreement. Here is what's interesting. Mr. Beth is not just walking away. He's agreed to stick around for 6 months in an advisory, non-executive role to help with the transition. Think of it as a cooling off period where he's still providing some support, but not in charge. During this time, he'll be getting paid $45,688 each month. Plus, the company is covering his COBRA health benefits. On top of that, any stock awards he had that were not yet vested, meaning he had not fully earned them yet, will continue to vest during the 6-month transition. This is a pretty common practice to ensure a smooth handover, especially for a key executive like the CFO. Now, what happens after those 6 months if Mr. Beth holds up his end of the deal, meaning he signs a release of claims and continues to follow the agreement? He'll get a few more things. First, he'll receive a lump sum payment equal to 3 months of his base salary, after taxes of course. Second, he'll continue to get COBRA benefits for another 6 months. Third, any remaining unvested stock awards will also continue to vest. They are also covering out placement services, which helps executives find new jobs, and one executive physical examination in 2026. This is essentially the company disclosing the terms of Mr. Beth's departure. They are being transparent about what he'll receive and what's expected of him. This is important for shareholders to see how the company manages executive transitions and the costs associated with them. And finally, as part of this filing, they've included the actual separation agreement as an exhibit. This is where all the fine print is laid out, but the summary we just went over covers the key points. Looking at HUB Group Incorporated's broader situation, this event comes at a time when the company is seeing some volatility. Earlier in June, there were reports of a significant stock drop. Around 24%, there have also been questions raised by analysts about potential accounting discrepancies, and even in SEC's probe. This context is important because executive changes, especially at the CFO level, can sometimes be linked to underlying financial or operational issues. The fact that they are amending a previous report to add these separation details suggests they want to be very clear with investors about this particular matter, perhaps to preemptively address concerns or to simply fulfill reporting requirements accurately. While this specific 8KA does not contain new financial tables, it is an update on executive compensation and separation packages. The detailed terms of Mr. Beth's payout and continued vesting of stock awards are financial commitments the company is making. These are actual dollars and stock value that will impact the company's balance sheet and earnings in the short to medium term. For example, the monthly payment of $45,688 for 6 months plus a 3-month base salary lump sum, and continued stock vesting all represent costs. Without knowing his exact base salary, we can estimate the lump sum severance to be substantial. If his base salary was, say, $15,000 a month, then 3 months would be $45,000. Add to that the 6 months of payments at over $45,000 each, and you are looking at several $100,000 in direct payments, not to mention the accelerated stock vesting. When we look at companies like HUB Group Incorporated, which is in integrated freight and logistics with a market cap of around $2.7 billion, these types of executive changes are always worth noting. Big investors like BlackRock and Vanguard hold significant stakes, and they are always watching how the company manages its leadership and finances. A departure of a CFO, especially unceremoniously, can sometimes signal internal turmoil or a divergence of opinion on financial strategy. However, the detailed separation agreement with transition services suggests a more structured and potentially amicable exit, which is generally positive. The recent volatility in the stock, down 24% on the 24th of June, the same day this agreement was signed, could be coincidental or could be linked to broader market sentiment or specific company news not detailed here. The news about potential accounting discrepancies being investigated adds another layer of concern. In such an environment, a clear and transparent separation process for a departing CFO can help to reassure investors that the company is taking steps to maintain stability and address any issues head on. What I am actually looking for is how this transition impacts the company's financial reporting moving forward, and whether the investigations into accounting discrepancies lead to any significant restatements or penalties. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.